Well, good afternoon, everyone. We're gonna call the meeting to order exactly at 4 p.m. And agenda and materials have been posted, and we're gonna go to agenda item 1, committee members. There is one correction. It should be noted. It has here the chair's trustee Croninger. It should be Chair Darlette Moore.
Yes, it should be.
And then, are there any members of the public on Zoom? Any hands raised? I don't know where to look for hand raised.
No, I don't think so.
No?
Mm-mm.
Okay. All right, so we're gonna make public comment. And so we're gonna go to agenda item 3.1.
Okay, I'm actually gonna defer that until after Vice President Bonstock talks
Okay.
about the budget and we do the audit, because anything I would say would be related to those
Got it.
things. So I think if
Okay.
it pleases the chair, we could go on to 3.2.
Sounds good to me. All right, we're gonna defer that for right now and go to item 3.2. Good afternoon.
Good afternoon. Thank you. So this is the draft financial statements.
We also have announcements for that.
Oh, no, I'm sorry.
Yeah.
3.2 is the,
Is
It's the
the,
budget.
yes,
This one right here.
the budget update. I'm sorry, I had it backwards. Okay,
You're
fine.
fine.
Very good. So this is the financial projection. And it's through the end of October. We were just closing the end of November now. And there are we've included a few items in there, but there are others that we have not had a chance to iron out. And so I want to sort of present it and sort of have a huge caveat at the same time. So you can see this is the format we started using last year.
Mhm.
We have the years before, and if you go over to the projected actuals, I'm sorry, the fiscal year forecast through the end of the year. I think it's gray, looks gray there to me.
Yeah.
We had a budget fiscal year anticipating a deficit of $3.5 million. And you can see that it's decreased at 1.9 million. And that is from one adjustment that we made. Really, there's a few little smaller ones, but in call them casual conversations with the chancellor's office, we have learned last week and the week prior that they anticipated the deficit factor would be reduced from 2.2 something percent to 0.75. And we have reflected that on the projections, and that gives us about $1.6 million of the money that we thought we were getting in originally anyway. However, I don't buy it. I don't. And I didn't when I heard it. You saw my presentations earlier. I didn't think it makes a lot of sense the way they approved the budget with a very large deficit, anticipated that they would receive revenues that no one else is projecting, gave us 8% in COLA, used last year's money to help with that. And now we're learning, we just learned over the weekend, that the revenues are coming in even lower than they thought, significantly lower. So not only do I think the 0.75 will be reversed and we'll go back to what we were, I could possibly see us having, you'll love this, a adjustment to last year. They give us, so remember they give us several versions of, advanced apportionment, P1, P2, and then a final calculation, a recalculation that we get early next year.
Yeah.
And that is their opportunity one more time to take money from us. And you remember, we got a deficit in June it could be in February or January, we get an even greater deficit for last year. Heck of a way to run a railroad.
Mhm.
So anyway, so there are a number of adjustments that I wanted to, that's one of them, and that's a scary big one. There are other adjustments.
Question
Oh, I'm sorry, yes.
It sounds like you're moving on to a different topic.
Well, no, I'm just gonna make it worse by talking about some of the other things that I think we haven't included in here as well.
But the revenue one.
Yes, yes.
Okay. So I have been looking daily now for the finance bulletin, which normally would come out around the middle of
Right,
November. Nothing. And I can see why they might have put it off until after the DeSantis news debate,
That's exactly what I was.
but we're past that.
yeah,
Yeah.
And so when you said you have heard this weekend about the revenues, what are you hearing? Any numbers?
There was an email that I received from Cambridge West. And they got it from, I think, School Services. Which confirms what I had sort of been hearing in other areas, that revenues were coming in less. I think $40 million less. I can't remember what it was. I get
26 billion
26 billion.
down. And so the shortfall for the community colleges is 1.4 billion in the Prop 98 guarantee. So that's, and then there's the question about what will actually trigger the use of the rainy day fund. And a budget crisis could trigger that without the governor and the legislature having to agree to it, if I understood the explanation in that. Because that's been my question all along, like, at what point is the rainy day fund usable? And the way that George wrote that email or that piece, you know, he points to the 8.22% COLA that was given this year, that it was completely unfunded, or last year was unfunded, or was funded with one-time dollars.
Right.
Yeah. So it's 1.4 billion for the community colleges, but I had heard the rainy day fund doesn't apply to community colleges.
Well, that's not,
Yeah.
that's not my
I've not heard
understanding.
that.
No,
I can no longer remember who said that, but it
Yeah.
was like, no, we're excluded.
I don't
It
think
might have
so.
been one of those seminars with the chancellor's office.
I don't think so, because the whole point of it is that it's about Prop 98, and the rise and fall of Prop 98 is what determines that. And so I think that's why I don't believe it, because no matter whether they like it or not, we're still 10.73%, or we're supposed to be
Right.
of Prop 98.
K-14.
Okay, well,
Yeah, but we can confirm, but I'm
Yeah.
pretty sure, yes, we will find out, yes.
later, not sooner.
Right, and so that's my first sort of, while this is our projection with that 1.6 added in. There are things that we know that are happening that we have not yet included in it, and we hope to in December. Getting to the audit was our big thing this time. So let me read some of the other things that we know that international students are lower than our budget. I believe our out-of-state students are as well. We will revise the revenue estimates for both of those. Transfers out, on the other hand, I'm hopeful are doing much better. We had, as you recall, a significant transfer out for food, for parking, and for the store. And while the impact of Follett will not be felt much this year, we still have 6 months of them. The real impact will be, I think, next year, but we will have some impact there. They're absorbing 2 of our people. So we'll see. So the transfers out for the store, I think, hopefully will go down. Food, except for the last couple of days where we've had the campus center closed, we're really doing much better. And in fact, some days our West Campus has been doing better than our cafeteria. which is kind of back in the day, right?
Yeah.
Where a lot of our students were over here, and that's where a lot of we made a lot more money. So, so food is something that we'll work on. Parking, we have more students coming to campus and buying parking passes, so we'll have a better handle on that. And community service with additional rent from our new big tenant, Antioch. So community services, the campus store, food and parking are all, impacting the transfers out. So obviously, community services don't have a transfer out, but that will help us to offset these others. We want to look at them. And so that's what's that, over $1 million, I think $1.2 million or something between the three, the store, food and parking. So hopefully that will reduce that $3.2 million expense. There are a couple of other things. The STRS refund, we got a significant refund this past month from STRS. Now, what happens is that when we pay our faculty members, a percent of what we pay them, we submit to STRS and goes into their retirement. However, not everything that a faculty member earns is STRSable. We used to call it PERSable. I mean, will affect your, you may be paid something that does not impact or increase your retirement. And so to the extent that we pay overloads and stipends, we also kick into the retirement system, and not all of those, in fact, most of them are not STRSable, and they give us that money back. And this past year, we contributed
$868,000
to STRS beyond what goes into the accounts of these employees. Yes, ma'am.
And does any of that have to do with the hiring, the low faculty numbers and the status of the hiring that we've been trying to do? Is that related at all?
No.
No, it has.
Because it's expended money that actually goes to the
Yes.
Mhm.
hired, okay.
It's
So that,
money that we have paid to faculty to do things that aren't STRSable.
Yeah.
So
Or
that's
they've maximized the amount that they can get for STRS in a single year,
correct.
because there is a limitation.
So those two things, we get a refund every year.
Mhm.
Bigger ones here than I'm used to. And in fact, $860,000 is off the charts.
Okay.
So that's going to reduce our expenses this year in salary and benefits. However, we also October was really our first month without the significant retroactive pays or increases, new increases or things like that. And so it's sort of our first month of see what things look like. And I think that we can say there came in higher than we thought. And so that's another one. We have to look at that and find out why exactly are our academic salaries higher this year than we had anticipated. We have a budget. We should figure out what's going on beyond our budget. So something is happening. So those things, the deficit factor, still a question, international enrollment, out-of-state enrollment, transfers out with community services, store, food and parking, the STRS refund, and then just general adherence to budget, which we need to take a look at. So all of those things hopefully will give us a much clearer picture. I know it's a big excuse,
Mhm.
but a better picture in December.
One more question. Since you've mentioned international and national enrollments, what about in-state? Are those numbers stable? Are they improving or
Or just our regular enrollment.
regular enrollment? I mean, I see the reports, but it's hard for me to kind of,
No, it's impossible to
Get an-
see off
yeah.
the reports. Yeah, those don't tell you. And I'm not sure on that one. I'm
I
not.
would really like to know.
Yeah.
I don't
Because
know.
that's, we are trying to build that up and I just like to see
So let me add
Right.
that one.
how our efforts.
Well,
Yeah.
We'll add to see how close we are getting to our enrollment projections, our general
That
enrollment.
would be great. Thank you.
Right, because it's a little complicated since we did have late starts in fall and now we're doing the spring enrollment. So, yeah.
Yeah, so that's another one. So all of those things will add real sort of, I think, more meaning to our projection. Our projection here is kind of where we thought we were gonna be, plus the $1.6 million. And there are, as you can see on that one sheet towards the back, on page 6 of 7, we have listed at the top, yeah, there we go, the changes to the budget that have occurred. These are ministerial changes mostly, smaller ones, but they add up. So you can see there was a decrease to academic salaries, an increase to classified salaries, updates to, but all told, it equals a change of about $8,000, not much.
Okay, yeah.
Then we have the $1.6 million in adjustments there, so. And we have $46,000 of revenue, and I can't remember what that's from. Yeah, the increase is 46, I can't remember, it's small.
Yeah.
Local revenues, anyway.
It's probably some of
We'll
the
remember.
contracts that we've been looking at on.
But anyway, I just wanted to show you, this is sort of what we're, where we are today. We're gonna get a lot better at, but this is about the time of year we start to really get more understanding of how we're doing this year.
Just a quick question, thank you. Could we display the page that you are referring?
Oh, sure, I'm sorry, yes.
Page.
I'm in charge of that, aren't I?
Yes,
There we go,
there you
there
go.
we go, this is the one I was talking about right here,
It's your last page.
page 6 of 7.
Turn your packet over.
There you go. Yeah, so this is the one, and it sits in this package each time, but here we got the net of the adjustments here, 40, and they're all very small, except for the 1.6 million here, which is what we were told from the chancellor's office, but after that, we realized that the people who told us, they're all leaving.
They're all leaving, yeah. Yeah, because I talked to Lizette Navarette at CCLC, and she's like, yeah, I think it's gonna be about, it's really gonna be 0.5% probably. Well, 2 days later, she was announced as the president of Woodland College, so she's leaving.
Good for her.
Good for
So
her.
she's trying to give us some artificial good news. on
Yeah.
the way out.
Yeah, so who
Some
knows?
fake news
I
on the
don't
way
know
out the
who's
door.
gonna be doing
Yeah.
her tasks, so I don't
So
know.
anyway, that's good.
Yeah.
We will take this to the board on next Thursday, week from Thursday, but I'll have the same caveats with that as well.
Well, I appreciate those. They're very transparent.
But thank you.
General update.
So that's that one. Any other questions on you?
Foundation checks.
Oh,
Oh,
foundation
yes,
checks,
yes, yes.
yes,
Yeah, what page is that on?
So the
that's the
foundation
41,000.
reimburses us for certain.
You
Yeah.
just
I just looked at it, yeah.
Got it, good. Thank you.
Yeah, yeah, that
And when we
number out
did
the
the-
blue.
I said,
That number out, I mean, the naming, I was like, wait, what is?
So is that, are we done being with
Yeah.
agenda item 3.2?
Yeah, and we can go back to 3.1 now that Brian has presented. The first thing I'm gonna say is what he said. What he said. But the other thing is that one of the things that that we're focusing on with our leadership team with ALA is doing budget training.
Yeah.
To make sure that folks understand, how do you go into simpler systems and see how much money you have? And if it's 50% of the way through the year, what should your budget be? And so we're looking at those kinds of things. They're just, for a variety of reasons, there hasn't been as much attention to just staying within budget. So Brian and Rudy and Nicole, we're all, are working on how do we come up with the best ways to train folks. And I think because it's hard to hold people accountable to their budget if they don't know what their budget is, if they don't know how to access it, if they don't know how to go to Nicole or Rudy or Brian and say, it looks like I'm running out of money. I still have a third of the year forward. What should I do? So I think we're really much in a learning phase right now, and that's all part of this.
Leadership Academy.
Yeah, well, the Leadership Academy is a separate thing.
Okay,
That's actually a college-wide leadership
Okay.
academy that's open to faculty, staff, and administrators so that we can grow our own. This budget is a separate thing that we'll be working with the ALA on
okay.
because they are the budget managers.
We have a long history of not doing everything that Eric just said.
Right.
So we're trying to really reintroduce government accounting, government budgeting, understanding that
We
you
did
can't-
do it at one point.
I was here.
I
remember.
was here. So
Yeah,
we need
so-
to get back to that.
Right, right. So, where people don't say, call the, the accounting office and have them move money for me so I can do this.
Yeah.
So all of the times that we move money in the budget, if it's not a correction of something, we will bring it to you as a request to move money within the budget between object levels, salaries or contracts and services or whatever, or between different,
Mhm.
or request money from the reserve. So all of those things are gonna be very deliberate going forward.
No, I think it's a great idea. I'm a firm believer in taking it back to the basics so people have a better understanding on how to utilize best practices.
Absolutely. And that when those changes are made, for example, if somebody does reach out to accounting and say, please move this amount to this amount, we understand, is this one time? Is it, and can you even do it? Because if it's coming out of there are line items you cannot take money out of or shouldn't be taking money out of. So, but we've got some good folks here to do some training,
Okay.
so that'll be good.
Oh, will we get like an update on this training, like maybe quarterly or every 6 months, just to see how we're doing? So we.
Well,
can
you get it by seeing the budget be balanced.
Yeah.
That's how we know the training's working. Is that the budget's
That's good
balanced.
news.
Yeah,
Okay. Anything else with your report?
no, that's it.
Okay, so now we on agenda item. Anything to say? Just like this. Agenda item 3.3, a draft of the financial statements.
Well, we have Ryan on the call here. Ryan, thank you for joining us. He's our auditor. But I think this will also be a fairly good news segment. Can I ask Ryan to present it for us?
Absolutely,
Yeah.
great.
Please, Ryan.
All right, good afternoon, everyone. My name's Ryan Milligan. I'm a CPA and senior manager with the firm of Eide Bailey. And I'm here to present you the draft for the 22-23 fiscal year audit for both the district and the parking fees report. The report itself, it's well over 100 pages. I'm not going to bore everyone to death and steal your whole night going over all 100 pages, but there are some key sections do want to highlight. But if there's any questions at all about anything you want to go back to that I did or did not go over, I will be more than happy to go over in as much detail as you want over any question you may have. So I'm going to share. Oh, can't share screen. Can somebody pull up the audit report and then I can.
Is that me?
Do it.
Okay,
Yeah, we'll do it.
thank you.
A draft of the park.
That one, not the
The
parking.
big one.
I think, did you have a presentation to make that you wanted to share?
I was just going to do the PDF. Just go through
okay.
right here. I'll just yell off page numbers and then just kind of just go on my spiel for these.
Okay, great.
All right. So the first one, it's going to be on PDF page 3.
Okay.
If anyone's got a hard copy, it's page 1.
Page 1, okay.
Scroll up. Scroll up page 1. Okay, right there. So first thing I'm going to point out is the audit opinion. So we give an opinion over the financial statements of the district as a whole. What the financial statements do is they take all of the funds of the district and they smash them all into one column, one set of financial statements. And then we add in, not we add in, but into these financial statements are things that aren't in the fund level, such as capital assets, your long-term debt with your pensions, your OPEB, your bonds, anything that's needed to bring it onto full accrual. And I actually have a schedule that'll show all of these things that go into the full accrual report on another page. But the one thing I want you to focus in on this page is that second paragraph in that first line where it says, in our opinion, the accompanying financial statements referred to above present fairly in all real aspects. Now, this wording is in this report and it's in the parking fees report. It's really the only thing I wanted to highlight in the parking fees report. But this wording is considered an unmodified opinion on the financial statements. Unmodified means it's the highest level of assurance that auditors can give that they are free of material misstatements. So this is always the wording you want to gun for when you're going to an audit opinion and you want to look at this.
Ryan, excuse me for just a second.
Absolutely.
Congratulations.
Yes.
Well, dude.
Yeah.
Congratulations, the entire football team, absolutely.
All they got.
Thank you.
Thank you, team.
So the next thing I would like to go to, actually I'll bring up is, so this report, like I said, it's about 100 pages. Almost 95% of this is all district's information. The only pages that are ours from a firm are our audit opinions and any findings we may have. So everything else, it does come from district records.
Right.
The next section is PDF page 7. It's report page 5. This is the start of the section. It's called the management's discussion analysis. I always tell board members, if you take nothing else from this gigantic report, look at this section. This is where management has gone in, added some narrative, some comparative figures from last year. It's highly summarized, it's highly condensed. They talk about some of the budget impacts, the financial highlights, some of the key items looking forward into the next fiscal year. So there's a lot of information in this little section. Again, if you read nothing else from this report, familiarize yourself with this one, because like I said, that's where management has been able to go in and give some narrative. As auditors, we do go in there, make sure all the numbers tied back to the audited financials, so they're not giving you one set of numbers and we give you a different one. So we do check that for continuity, but the responses are management's. The next part of the report, it starts on PDF page 19, report page 17. And this is the start of those financial statements. Again, these ones are the financial statements of all of the funds consolidated. So these aren't going to look like anything you've seen throughout the year that Brian and Rudy have presented to you, where you see everything by your funds. You'll notice there's a lot of accounts on here, like I was talking about earlier, with your fixed assets, these things called deferred outflows, all their debt. This is it's all put on here. Nothing else you'll see. Then following the financial statements, there's pages and pages and pages, probably 60, 65 pages of footnote disclosures that dig into all of these items you see right here a little bit deeper, breaks them down, gives you a lot more detail, especially on things like the pensions, your OPEB, and a lot of the long-term debt items. It really, I say, breaks those down into probably more detail than anyone needs, including me sometimes.
I have a
Then-
question.
Yes, absolutely.
Is there anything that we should be paying particular attention to? Is there anything that is standing out? There's an outlier or something that's particularly good, or is this just, pro forma standard looking?
It- Pretty pro forma standard. In this, there's really nothing that's going to stand out to you as a board, because what you're looking at, what you should be more concerned with, is more of an operational cash flows and revenue expenses. This, unfortunately, doesn't have that. The thing you would be more concerned with, if anything, would be go 3 pages down. Could be this cash flow statement, just kind of shows where the money of the district is going in and out of. Just from my experience with both SBCC and doing the college system, our firm we do about 40% of the entire system. All your numbers are right in line. There's nothing that, gave me any sort of bell, whistle, alarms, anything going off. So I can give you that kind of assurance, but it's going to be really hard from what you're presented to take away and apply it to this.
Okay, because on page 18, there are the operating revenues and operating expenses, and you said we should be concerned with operations. So, I was just wondering, since these are.
If I could, Ryan, there's a difference between the financial statements and management information. This is not, in my opinion, information you'll use to manage. This is information that's external facing, more, it's not the down in the weeds, budget actuals, things like that.
Transparency.
Exactly. This is
Okay.
intended for a different audience.
Got it.
It's not necessarily intended to help you manage.
Got it.
internally.
Okay.
Did I get that right, Ryan?
Yes, and this information, we're in December, this was as of June. It's not really in a position to make decisions looking forward on this. This is a looking back on how things were the prior fiscal year. And as Brian said, a lot of people, the parties that are more interested in this are going to be the bond rating agencies, bankers. It's going to be those financial folks that you deal with if you're going to go out for a bond or that type of thing. The accrediting agencies will look at this to an extent. I've had some questions from clients who they look at, they'll say, hey, let's drill into this number right here on my operational expenses, and I can give that to you, but that's generally going to be about it.
So this is like basically our financial directory of all of our assets, ins and outs.
Absolutely.
Yep.
I just wanted to raise that because when we get these huge documents, you want to know which thing we're supposed to be paying
Focused on.
attention to, or what, what thing are we speed reading, through, but, so thank you for that clarification. It is helpful.
And absolutely, and I said the one thing we want to focus on is that MD&A, but there's going to be a page coming up. I'm gonna tell you is the most important page. That's the one you always just want to flip right to, if nothing else. Even if you don't want to read that MD&A, read this one page, and I'll let you know when we get to it. It's coming up very shortly.
All right. Okay. Go on.
All right. So the next page, go to it's PDF page 80. So this page and the page after this is basically the reconciliation between fund level financial statements that you're all familiar with, which is at the very top, that 81.877 million.
Wait.
Everything below this, all the way to
Right,
this,
the 70, well, wait,
One moment,
wait a
Yep.
minute. So is it actually, is it actually 76 or are you looking at?
I'm sorry, it's PDF page 80, it's report page 76. So it's this page.
Okay, yes, that's what we thought.
Okay.
Okay,
Page 76.
okay, hold on.
I was like.
yeah,
wait,
that's the
what?
right one.
Sorry.
Okay,
No, that's okay.
now we're ready.
Now we're on the same page.
All right. Literally and figuratively. So at the top, these are your fund balances. These are what you see on your 311s and on anything that the district management, the finance team gives you. These are where these funds ended at the year. Everything below that 81.77 million, those are all of the amounts that are brought on to give the full accrual financial statements that were on the page 17 that we just went over. We said we smash everything and bring on full accrual.
All right.
So this is why it's really hard to see the operational finance reports that you receive and this, because there's, as you can see, I mean, over $100 million of balances going up and down all over the place.
Okay.
And then, so now I'm going to come to that one page I'm going to say you should always flip to as a board member. And that is PDF page 94, page 88 of the report.
Did you say 88?
88, correct. So this is the summary of auditor's results. I like to call this is the auditor's report card to the college. This is where we have basically a summarize of our entire audit.
Is it
Part of
just,
our audit
okay,
is we give 3 opinions. One on the financial statement, which is what I read at the very beginning. We also give an audit opinion over federal awards, a lot of financial aid. It's a lot of the HERF money that came in, the CARES Act stuff. The federal government issues guidances on how we have to audit these programs and what type of rotation, what type of coverage we have to get. And then at the very bottom, it says state compliance. Every year, the Chancellor's Office, they give us a laundry list of about 20 different areas. Some that have to do with fiscal and some are more student services, some are more IT related, but just different areas that they want us to kind of poke our noses around and snoop around. So all 3 of those opinions, you can see the word unmodified, unmodified, unmodified. That's what you want to look for.
Okay.
So on the financial statements, you see we did not have, after it says unmodified, it says internal control over financial reporting was material weaknesses or significant deficiencies. If we had findings, that's where this would be indicated here. A significant deficiency, it's one of those things that barks is worse than its bite. It's actually the lower type of finding severity. It's something that's not material to require an audit adjustment, but it is something that we think needs to be brought to the attention of the report users and of the board. So you see we have a material weakness generally means there was an audit, we did find something that did cause an audit adjustment, or you were materially out of compliance with an area. So you can see for the financial statements, those are both no, none reported. Yeah, that's what you want. The federal award section, there was no material weaknesses, but we did identify a significant deficiency, which we have in the audit report in, I think it's 2 pages after this, had to do with the, was it, state local recovery funds. We did have a couple instances where funds went out to ineligible students. The financial aid department went in, did 100% audit of this program, went back, got everything to where it needed to be. Unfortunately for the financial aid department, this was not a problem, but this was a program where the chancellor's office kind of switched the rules after they dispersed money. And with some of the vacancies that have been in the financial aid department, it was something that got missed. That communication got missed, unfortunately. The communication went out in January of 22. Our audit started July of 23, so there was a 6-month bumper to get everything implemented. However, it just didn't happen. So I believe the costs have all been reimbursed to the program from eligible sources. I said the department went back and did a full 100% audit. So I do not anticipate this being an issue moving forward. And they did provide a response and an action plan at the very end of this finding, if anyone wants to read that. And then go back up to 2 pages to the summary of auditors results. So that was one of the federal programs we audited. At the middle of the page, you see these identification of major programs. These are all the federal funding programs that we did audit. Your Student Financial Assistance Cluster, that's Pell, SEOG, Work Study, Direct Loans, the Coronavirus State Local Fiscal Recovery Funds. We also audited the Title III program, Title V program, which are your HSI and STEM programs. And last year, you guys were my only ones to exhaust all your HERF funding and spent it on time, so I didn't have to audit there, but I almost said and your HERF too, but you guys went through that pretty good. So
Right.
these programs all represent roughly probably 90% of your total federal dollars, which is a very high coverage for an audit.
We should be an example at one of the ACCT or CCLC about that, because that's an accomplishment. And
That is,
we stand
yeah.
out, so.
That's right.
Absolutely.
I have a question. Did you say that this area represents 90% of federal dollars?
About federal, 90% of the federal dollars the college received during the year was subject to audit, correct?
Okay.
I have a question.
Yes.
Earlier you said that we had distributed 6,000 to students who were not eligible. Does
Correct.
that mean we got that money back from the students who probably were unhappy?
No,
I thought we got,
Yeah, what happened was, so the backstory was we issued it, there was a memo that went out, financial aid, that said we could do it. The manager of financial aid went on medical leave. When she came back, we realized, wait a minute, there was a second memo that came out updating that, no, they're no longer qualified. And the chair's office said how to fix it. They said you need to move it out of those funds and get it from other funds that are eligible. It turned out that we had a couple of stale dated checks from HERF that got reimbursed, and we were able to use that. We'd already spent it, but it was still dated. So we're with financial aid and we found the funds that were eligible to fund those. So yes, it got returned where it needed to be per the chair's office's guidance. And we found the funding source to fund those students. So those students were taken care of.
Okay, that was my
Right.
question. Did the
Yeah.
students have to pay it back?
No, I mean, it was more like collect and I think it was more on the, I think Maureen did it, she's the one in charge. I think it's more on the back end with our funds. But I can't assert the mechanics, like I doubt that we actually physically took the cash and moved back, but we, from an accounting perspective, we made sure that that it did come out of the wrong fund. And we actually, and Ryan, like Ryan, you said, we did the whole write-up like that, where we actually detail it out, right? Was that okay, Ryan, the write-up?
Absolutely.
Okay. Details are better than what I just said.
okay.
Because I just kind of copied what Maureen told me, so.
If we, if you're okay with what we've gone over so far, there is one area that I did want to point out, actually two. And it's on, I'm sorry, Ryan, or is this a good moment for me to jump in?
You jump in whenever you want. I'm at your disposal.
Page 14, if you go to page 14, the PDF page 14.
Okay. Yeah, I was looking at that earlier.
So,
So I think it would be the
wait a minute, that's a
down.
different. They did that.
That,
There we go, right here.
that's the
So
one you
here.
want. Okay.
The aggregate net pension liability. You can see in 1 year, it went from $61 million pension liability to 88, increase of 26.
Okay.
Which is our share of PERS and STRS. So we participate in those as school districts do. And the year prior, they had a great year and banner year in 21, 22, and in 23, PERS and STRS did not have a very good investment year. And so our liability there jumped. You can see, what is that? 26 out of 61, that's like 40% increase, which is huge. Nothing we did. But again, the pensions have been underfunded for a long time. They have a very high anticipated return, which we failed to get. That keeps the rates low doing that. Now the rates are really rising, but they stayed low for many years. And they're still in the STRS area, they're still under what they should be. So I just wanted to point that out. That is a big change on our balance sheet. The other one is, and this is one of them that is the OPEB liability. You can see that it's 6.3, went up to 6.6. After,
I'm sorry, what's
it's
OPEB?
right above it, OPEB, other post-employee benefits, and that's health.
Thank you.
And we have remember a couple of months ago, maybe it was even last month, I brought to the board our actuarial study. And remember the concern we had where it shows, oh my gosh, our payments are like $100,000 now, and they're going to shoot up to $600,000 in like 5 years. And I thought, that seems familiar. So I went back and I looked through the drawer in my office, and there's not too many that are there. But so I pulled, here's that report that we pulled. This is the OPEB report that we pulled. And it's on page 2. This is the one that we had the discussion about. Sir. Concentrated on that table there where it shows our ballooning payment. Page was that 2?
2.
Yes, so it shows that, oh my gosh, we're going from our payment this past year, a little over $100,000. It's going to go all up to $600,000 in a few years. That looks alarming. What are we doing? And so I went back and I pulled some reports from 10 years ago. 10 years ago. Where is it? Right there. And in 2010, our payments were $217,000, and they were projected to, by 2019, to be $400,000. And we know there's still $100,000.
Okay,
So I just wanted to
Yeah.
point out that while it looks like the sky is falling,
right.
it's the methodology, I think, of that. We have such a modest benefit.
Mhm.
Our benefit starts, our benefit starts when you retire and ends when you turn 65. So they're trying to guess the number of people who are going to retire in that very small window, and it changes. And so the cost goes up, but not that many of our employees retire.
Retire then, yeah.
So I just wanted to make sure that we get and so as you see on our financial statements, that it's $6 million. Well, it's costing us about $100,000 a year. I don't think it's worth setting up an irrevocable trust and putting $6 or $8 million over there and paying for the interest, paying for our annual thing. There may be down the road,
Right.
as long as we keep that benefit as modest as we do, it's not as scary bad as some of the other, like the FERS and STRS. Anyway, I just wanted to point, after that last meeting, I thought, I'll go back and look because I don't remember it. I thought it was higher back then. And anyway, so it's very modest. So,
Thanks for
Anyway,
that
so-
context, historical context.
Mhm.
and that's from 2010. So 14 years ago, it showed it.
I was just wanting to ask if maybe the trustees would like to have a refresher of what that benefit actually is mostly for this individual employee.
Yeah,
Are you interested? So for the faculty member, it's, I believe, about $5,200 per year. Towards their health insurance, post-employment until they turn 65. And I think for the classified staff members, it's about $100 or $200 a year. So it is, as Brian said, in fact, a very modest support for our retirees to help them cover their health insurance until they turn 65.
I think this past year in our report, there's 18, I think it was 18 employees who retired before 65. Everybody retired at 64 or at 60, but there's a reasonably small number. Now, some other districts have a benefit that gives a person a supplemental, like a Medicare supplemental, $200 a month for the rest of their life. And and like CSU, you work 5 years, you automatically get that benefit. Ours is modest, and so our liability is way lower. But some of the other districts I've been, as in North Orange, we put $75 million in a trust to cover.
Yeah,
I mean, it's very large, and it's a supplement for a person's life medical. It doesn't cover everything, but it gives money towards a supplement. So anyway, I just wanted to, although it's not exactly part of the audit, I just wanted to give a little bit of context to
No, this is
those
good.
two numbers, because the PERS and STRS, I think, is a number we should keep our eye on. We can't do a lot about it. But the OPEB is not as bad as it looks in my opinion.
in the LACCD, lifetime medical benefits is driven by how many years you work for the district. So if you work for the district for 5 years and then you retire, you get 25% of your benefits covered for life. If you work there 10 years, it's 50%. 15 years, it's 75%. If you work there 20 years or more, you get 100% lifetime medical benefits.
Wow.
So imagine what the liability
Big number.
is. It's a huge number for
Right.
a district that large.
And it will impact what you're able to deliver to this year's
Yeah.
students, paying for people who may potentially haven't worked here for. Unless you set up an irrevocable trust that's sufficient in size to self-fund it. There's very few that have done that.
Well, it's hard to see where we would write a check for that kind of money.
So those were, other than the congratulations, those were my comments.
Yeah.
Ryan, were you finished?
Yes, I was all done, unless there's any questions. I mean, my closing spiel is, a lot of times this is anticipated or seen as a fiscal audit, but this is really a district audit. We couldn't do this audit without other departments from institutional effectiveness, student services, HR, just all over the campus. So to get an audit report with no audit adjustments, I had the one finding, but you know what, that finding, like I said, it wasn't a severe finding, and we were able to isolate it and quantify it and get it taken care of. It's quite an achievement, actually. Some of these federal programs, they're finding landmines, especially the student financial assistance. The audit guide that the U.S. Department of Ed issues for that one is longer than any other federal program that they fund for. So,
Well, Brian, for your information, that area has been one that's been flagged, and we've been following here at the college, students getting funding who aren't either entitled to So we've been watching that, and it's good to know that it's not something that's out of line. So, but just so you know, it is something that we're aware of and have been working on as a
Yeah.
help.
I've had many conversations with Maureen about it, about everything that's going on and all the checks that are going on and everything that they did going backwards with them going forward. So definitely handling that for sure.
So the other audit we have is for the parking program. And,
Can we bring that document up?
while I enjoy seeing the audit and doing it well, I don't remember doing this at other places. So, did you guys have a parking audit?
No, we did not.
Yeah, so somewhere
Different every
between
time.
20 years
Yeah.
ago when I was here, I
Yeah, we
didn't
didn't
have one
have
in
it
any
as-
other district. Somewhere along the line, and Ryan, you may be around when that happened. I don't know why we haven't
this-
audited the parking program.
This report does predate me. However, it was my understanding that it was through an MOU with the city because these are,
Oh, that makes sense.
those numbers needed to be audited.
Yeah.
I see.
that-
Because
Not
we
always
share-
firm with, it made sense because they are, I think, joint use lots.
That's
Mhm.
right.
There you go.
Okay, darn, I thought we had something else to brag about.
Yeah.
Yeah, okay, well, very good. Okay, well, let's jump into this one then. It's a very small program, obviously. Okay.
Yes, this one, it's very small. It's ran as basically like a department of the general fund. There's not much to this one. The only thing I'm going to point out is again on PDF page 3.
The actual page 3?
That page right here.
Okay,
That first line in the second paragraph under opinion again, where it says, in our opinion, the financial statement referred to above presents fairly in all material aspects. That, as we learned from the last report, is unmodified wording. So we did not have any issues, any adjustments, any control deficiencies, or anything to do with this particular fund statement that was presented by or prepared by the management.
This will be an area, as you see, we lost $252,000 last year. We're hoping to, with more parking permits, and while I floated this idea very quietly, when I was here 20-some years ago, our rates were $28 for a parking permit. Today they're $35. When I was here 25 years ago, we were real close to the maximum at $28. Today, the maximum is $70 something.
Yeah.
In other districts, Ventura is $64.
Yeah.
And we're charging $35. So there may be an opportunity. And one of the things that we did back when I was here before was we tried to discourage people individually driving. And we're gonna open up our carpool lots come in January to try to get people to, because while our enrollment, on-campus enrollment is about half of what it was at one time, we fill up our parking lots way too fast. And so we're really gonna try to, students are already complaining about, when we were able to have 24,000 people come to this campus and fit on 2,400 spaces. Now we have 9,000 people coming to campus and we're running out and they're complaining. So it's just the way we're doing it. We have really low fees so everybody can afford it. Pass. We have no parking carpool, so everybody drives alone. We need to get back into why we start to encourage people to ride with a friend, take the bus, ride their bicycle, other things like that. So, and we need to get rid of this deficit because this is general fund money going over to fund a parking program, which by definition should pay for itself. And it should pay for reseal every once in a while and maintenance, as well as the people to operate it.
right.
So those are things that I think going forward, we need to rethink, or we will rethink to try to stop using general fund money for this.
Go ahead. Thank you. Yeah, I had a question. So, are you, going to be advising or suggesting, I'm not sure, again, trying to stay in our lane, that we raise parking? Is that something that we're gonna be asking for? Because, we're dealing with these dangerous potholes and expensive potholes that are damaging our cars and, other things. But is this something that we can ask for, given how low we are, or is this something that happens outside of the trustees?
We were gonna try to
Yeah.
come up with, what we thought would be a rate that people could afford, that would help cover our deficit. Our deficit is caused by two things, a low permit cost
Right,
and
yeah.
fewer permits sold.
Yeah, right.
So more people are buying them and I'm suggesting we would raise the fee at some point. We'll probably bring that back.
Okay.
We have not, these are very initial conversations.
And we
Okay.
need to vet it with our students. We need to vet it with the campus before we bring it to the
Right.
board.
And we also put a, ecological, air sustainability
Yeah.
frame to some of it too.
Correct.
Okay. Thank you.
We have 2,400 spots. So we will never have enough parking for the people who come here.
Yeah,
By
and that's
design.
one of the issues, because people were saying when we were crowded, and are probably saying now, it's not a parking permit, it's a parking lottery.
Yeah, so hunting license.
Hunting
That's what I was gonna,
licenses.
because it's,
Yeah.
UCSB is sort of
And-
like that too.
So that's gonna, we'll get pushback on that, I think legitimately, and also the numbers, as you pointed out, ideally include some repair, and that really shoots it up, so.
Correct.
Yeah.
We gotta start somewhere. But I will tell you, a week from Friday, or is it this Friday? A week.
I think it's this Friday.
This
the 8th.
Friday, we've hired a company to do some pothole repair on our
Here.
driveways. To see if we can, make it so it's not as bad as it is today. We'll see. Most of the companies said it's not repairable, but we're gonna give it a try.
It's good. So they want to do the whole thing slurry,
No,
scrape it up.
tear it out and start over again.
Yeah,
Which is
that's
what
what
it really,
Neat.
we're gonna try to patch what we have with a very small, we'll see how we do and we'll keep going. Also, just so you know, that we cannot put in for scheduled maintenance money. We can for our driveways, but we cannot for parking. It is
Yeah,
scheduled,
not
the
allowed.
parking program, operation and maintenance of the actual parking lots are supposed to be self-funded by design. So, or
You can use bond
You can-
funds
you
for
can
it, but
bond
it has to be
on it.
self or bond, not general funds.
So on the last page, 1993-94 refers to a $6 million loan from district's construction fund for maintenance and improvement. Is that when we last did the whole thing?
that's probably when they built the parking structure or something. I don't know. This was to demonstrate that we'll never pay ourselves off the parking fees. I don't know. This was done even before I was here, but that's about the time the parking structure was built.
Mhm.
So I wouldn't be
That's probably
surprised if that was the
Okay.
parking structure.
Not even the repair.
It may have been the driveway and some other stuff to the parking structure. Sure, so. Brian, any other comments on the parking audit?
Not from my end.
Well, thank you very much for your good work.
Yes, thank you.
Absolutely.
Yeah.
No, I thank you. You make my job easy. So, again, I wouldn't be able to do my job if it wasn't for everyone at the district doing theirs and being responsive to the audit, getting us information we need, and
Can you close the share?
everything's still clean.
Thank you. There
And
you
if ever any questions, if you have time to digest some of this and you have questions, by all means, get those questions to Brian or Rudy. They can get them to me, and I'll answer anything you have about this report.
Okay.
I like your Frigidaire beverage.
I know, look at that.
That's
I
cool.
do.
I used to have a black one, and it just went out on me about 2 or 3 weeks ago. So that one's brand new, but I love it. I think it matches my red line stapler too,
Okay.
And your tie.
and my tie.
So our audits will be finalized then before the next, the board meeting then, is that
Yeah,
right?
it'll be issued on Thursday, the 7th.
Okay.
Everything's
Great.
prepped and ready. I went through all of our audit files this morning, went up and down. Tomorrow, Brian will send you a management rep letter dated for the 7th, and yeah, it's on autopilot at this point.
Good.
Okay,
Nice, thank you.
Thank you, Ryan.
thank
Very
you.
well. Have a good night, everyone.
Good night.
Good night.
You too.
Well, that concludes all of our agenda items.
So can I just ask that you all, even though it's not an action item, is it fair to say that you believe that that the audit should be forwarded to the board for their consideration to be accepted?
Absolutely.
do.
Okay, great. You don't have to have a motion. I just wanted to
Yeah,
make sure that we're
yes.
all in
Oh,
agreement that
Yeah, with this
these
good
should
news,
be
well,
submitted
kind
to
of
the board.
mixed bag, but with this good news, you know, tempered with some of the.
Yeah, no, this is a very
Yeah.
clean audit
Yeah.
and, the fact is that they found the two instances, they were able to identify it
Yes,
and
yes,
remedy it. And, I have been involved in other audits where the challenge was much greater in terms of, and where it often gets very sticky has to do with residency. And, so this is great.
Good.
It's all relative.
Usually we get the foundation audit too.
The foundation, yes, on the board agenda, for the 14th, there will be the foundation audit as well as a report out on the Santa Barbara Promise.
We're gonna be,
Party.
we're gonna be getting that on the
Three,
14th.
That will be on the agenda for the 14th.
Foundation, and what was the other one?
Foundation audit and a report on the Santa Barbara City College Promise. through the
Okay,
Foundation.
and then I would like to have like a standing item added so we can keep a reminder of possible future topics. So like have a category of future topics. So then I don't have to keep going back looking at all my notes to remind myself, what future topics did we say we're gonna come up with, so we can just have that area there. And then when we come up with these light bulb ideas, we can just say, can we add that to that area for the next meeting?
Okay.
Right. Can I say something?
Sure.
As far as the audit report, I would love to do this, right? Nicole Dare should come in, but I really, I need to point this out, a couple of things that has made it successful in the recycler have been here. We've had transition, couple of VPs, we want to, right? Come through. We brought one back, right, for retirement, maybe, and we've had the second iteration of assistant controller, I came in. And I really think it's a testament to the folks that are there, the staff, right? They're the continuity. They're the ones that keep us in check to make sure when we want to do an entry, they're like, no, that's not probably right. So it's that institutional knowledge, and I think it needs to be appreciated. We have folks there that have been, Nicole, with 20 years, someone, Lisa? Institutional knowledge.
Correct.
Right?
Lisa
And so I think it's easy, right, for management to take a lap, and that's great. But the institutional knowledge is there, and with some of the when we lost this controller and Nicole stepped in, I really saw the wonderful work they do. And so I just want to shout out to them. That's who deserves credit. And the boss as well, because the boss really, I think, did what we asked. Nicole and I said, boss, just
Stay out of my way.
and then when it's done, we'll send it to you to review. And Brian also did, I think, what we expected, which is like do the oversight, which I felt was great this time around. We were able to do it, hand it to him. He found a couple of things, and that's how the review process was to go. I mean, I started off in Deloitte back in the day, and that anyone that's been in public accounting, you never get mad when a partner and their partners senior partner review stuff. And I think that's why I feel very proud of this, to staff and the leadership on top.
I agree. Thank you. Thank you.
Thanks.
Well, if there's no other hands being raised, I would like to call the meeting adjourned.
All right, awesome.
Thank you.
Thank you.
Everybody.
Thank you.
This was really